The dispute management component in SAP ERP contains functions for settling dispute cases relating to receivables. It complements the logistical process chain, purchase order, delivery, invoice, payment in the stage between invoice and payment if the customer disputes anything at this stage.
A number of issues arise in the dispute case process that can be improved as part of financial supply chain management. These issues form the starting point for developing the dispute management component in SAP ERP. If customers make reduced payments or do not pay at all, the days sales outstanding or DSO increases. Days sales outstanding is a key figure indicating the average number of days that the customer takes to pay based on annual sales. This is the case particularly in times of worsening customer payment histories. In the case of deductions, the net value date is no longer valid for the cash flow forecast. This leads to difficulties in predicting cash flow. Dispute resolution today is a costly and highly manual process. The increasing number of disputes, therefore, has a double impact on costs. In addition, disputes can indicate customer relationship issues or problems within the company and can thus provide an important starting point for a company's quality management activities. How do receivables-related disputes arise? Customer provides information actively. Contact with complaints department. Contact with account manager. Contact with customer's accounting department. Customer makes a reduced payment. Payment difference discovered when incoming payment is processed, that is, cash management or accounts receivable accounting. Customer delays payment. Receivables become overdue because payment is not made and are discovered during account maintenance, that is, accounts receivable accounting. Process integration into financial processes has the following aspects. Integration of dispute management functions such as creation, display, and editing of dispute cases in financial processes or transactions. Automatic update of dispute cases by certain financial transactions. Automatic update of items in dispute cases by certain actions in the dispute management component.
This figure depicts creating a dispute case on receipt of payment.
The case management organizer is the tool to process dispute cases. The environment for processing disputes accessed with transaction UDM_dispute is where all users functioning as coordinators or professional agents such as dispute managers and dispute specialists perform their tasks. It has two main areas. Organizer on the left-hand side of the screen, start actions. Results area on the right-hand side of the screen, display results. In the role-based view, users can work on the record and case record models only for customizing users, as well as on dispute cases. Different role-based views can be defined for processing dispute cases, for example, to restrict the end user's view to the cases folder. The history enables quick access to dispute cases and other objects you have been working on before. The information displayed in the results area depends on the action performed in the editing area, such as Find Dispute Case, Selection Criteria for Case Search, My Dispute Cases, List of Dispute Cases, Search Result, Create Dispute Case, Screen for creating dispute cases.
Sales organizations are responsible for sales in SAP ERP. A company code can be linked to several sales organizations. The IDES company code 1000 Germany uses the sales organizations 1000 Frankfurt and 1020 Berlin. For example, any accounting relevant transactions in either of the sales organizations are posted in company code 1000. Each sales organization can use different distribution channels to sell goods. In principle, A distribution channel can also be used by two different sales organizations. IDES uses the following distribution channels: final customer sales, resellers, service, factory sales, store chains, industrial customers, pharmaceutical customers. The combination of a sales organization and a distribution channel is also known as a distribution chain. Distribution chains sell goods from the plants. Both of the IDES distribution chains 100010 and 100012 sell goods from the IDES plant in Hamburg and post the sales in IDES company code 1000, which is also assigned to the plant. Divisions typically represent key product lines of an organization. The divisions are assigned to the distribution chain from which they can be sold. The combination of distribution chain and division is a sales area. Customer-specific arrangements regarding partial deliveries or terms of payment, for example, can be made for each sales area. Statistics can be created and separate marketing activities carried out within a sales area. A sales area is the combination of sales organization, distribution channel, and division. A sales area must define sales area specific settings for a customer before it can start doing business with that customer. These settings could be special conditions and terms of payments that the customer has arranged with the specific sales area. An effective processing of sales orders involves all sales activities in a chain of narrowly integrated processes. The SAP system allows you to do this kind of sales order processing. The individual steps within a sales process are thus mapped by interlinked electronic documents. The SAP sales process begins with the setting up and the maintenance of customer relationships and ends with the invoicing of the delivered goods or the services rendered to the customer. The posting of incoming payments from the customer is already part of SAP ERP financials. The sales order processing begins with the pre-sales activities as shown in the following example. Customer query, you create and send a quotation. Order processing, you create a sales document. Procurement, the system determines the supplier of goods using data stored by you. Shipping processing, you organize and execute the delivery of the goods. Invoicing, you create the invoice and transfer all required data to accounting. Payment processing, you check open items and post incoming payments.
Sales order. The sales order forms the basis of the sales process. Once a customer has placed an order, a sales order must be created at the start of the process. The sales order is generated at the distribution chain level. The ordered items can be from different divisions. The sales order is a document in sales order management and does not cause any postings in financial accounting. When the sales order has been entered, the system carries out an availability check for the required delivery date. Outbound delivery. On the day of shipping, an outbound delivery document is created. Billing for the delivery can take place only when the goods have been taken from the warehouse stock and posted as a goods issue. This is a separate step in the delivery process. Picking. The warehouse management function is used for picking. A transfer order has to be created, which generates the pick order. The requested goods are taken from the warehouse and prepared for delivery. Goods issue. The goods to be delivered are posted as a goods issue. A goods issue document is created in materials management and an accounting document is created in accounting so that the goods issue is posted to the correct GL accounts. The accounting document debits cost of goods sold and credits inventory. Billing. A billing document is created in sales order management and a printed invoice is sent to the customer. At the same time, a document is created in accounting so that the receivable and revenue can be posted to the correct accounts. Document flow. This is a tool that allows you to view the related documents in the process. The sales order entry screen consists of several sections. Header data combined with position data. Item details. At the start of the new fiscal year, the balance carry forward program is run. It ensures that the balance on customer accounts is carried forward to the new fiscal year. The posting periods of the old fiscal year are then blocked and the special periods for closing entries are opened. After this, the following closing operations are carried out. Balance confirmations are sent and evaluated. Foreign currency documents are valuated. Value adjustments are carried out for overdue receivables. Accounts receivable are reclassified into short and long-term categories for the financial statement. The special periods can then be closed.
Balance confirmations, foreign currency valuations, and regroupings are carried out in the same way as in accounts payable. Therefore, we focus on how value adjustments are performed. The following options are available for creating value adjustments for receivables. You enter individual value adjustments or IVA as a special GL transaction E. You use program SAP F107 additional valuations to carry out a flat rate individual value adjustment. Once you have determined the amount of the value adjustment, you adjust the flat rate value by making a manual GL account posting. The posting record is expense from flat rate value adjustment to value adjustment. Doubtful receivables are written off as an individual value adjustment or IVA during year-end closing. The special general ledger method is suitable for this procedure because the transaction is entered in the customer account and is also posted to a special GL account, individual value adjustments for receivables. Use the tax code that represents a tax rate of 0% for the posting. After you have ascertained that the debt is irrecoverable or that the receivable has been paid, the individual value adjustment is reversed. If the debt is irrecoverable, the receivable is cleared from the customer account and the amount is posted to the account for depreciation of receivables. The sales tax is adjusted in the posting.
You can use a valuation program to carry out value adjustments. The program functions like the dunning and payment program. Each valuation run is clearly identified by the run date and identification fields. You can specify how to execute the valuation by entering parameters for the valuation run. You can use the parameters of an existing valuation run as a template. These parameters include the valuation method, valuation area, and posting specifications. The valuation run analyzes the accounts and documents defined in the parameters and creates a valuation proposal. You can edit it if necessary. The valuations can be entered manually in the document at an earlier date, that is, individual value adjustment, determined using a value adjustment key contained in the customer master record. During the valuation, a certain